Hi fellow traders, I'm making this video to share my views on USD JPY with you. So we'll start with daily time frame because there is nothing new on 1 hour time frame. Market is in uptrend and it's still the strength is way stronger than any other currency pair, despite less than expected flash manufacturing PMI from the US today. USD JPY didn't show much downward movement, so this was just a temporary movement. Let's go to the half an hour time frame. So this was just a temporary movement, and then USD JPY returned back. So this made such kind of candle, which we can call hammer candle. This candle is similar to this hammer candle, and then upward movement and had continued previously. So there is a chance that upward movement will again continue after formation of this hammer. So now the question is, what probably will happen in the nearest future in USD JPY after such a furious surge? So let's go to weekly time frame. There we'll have some answer to this question. So we'll look at this weekly time frame. And we will try to understand the support and resistance zone here. This shaded area is the support zone, made by these three lows, whereas there are two ways of determining a resistance zone. One can be this swing high, this high, and probably this time USD JPY will make similar high around this area, which is coinciding with 78.6% Fibonacci resistance of this swing from this point to this point. So this area is 112.40. Most of the traders and analysts around the world agree that 112.40 is an immediate resistance in USD JPY. So here we'll see some reaction, and then we will perhaps see meaningful retracement to the downside. Otherwise, we can't trust on such kind of retracements. We can't trust because USD JPY did not show downward movement like other pairs. If we will look at other pairs like Euro USDC, this is what happened in Euro USD after release of less than expected flash manufacturing PMI. This is what happened on GBP USD. It's a nice move of kind of like 39 pips. Here we can see since the release it's a significant move of 53 pips. Even Australian dollar is moving up. Almost all currencies have gained significantly against US dollar, but Japanese yen didn't gain. All gain has been reversed back, and this is the formation of hammer, which is why 112.40 is still on the table, and probably after hitting 112.40 there will be chance of meaningful retracement. But I'm not saying that we should now place sell limit order right here. Now we'll be looking for the development after USD JPY reaches 112.40, and then we will decide what to do with this pair, because certainly this is not a resistance level, because if we think in another way, breakout of this trend line had already taken place. If we draw a trend line, this is a trend line, all right, this joining this high, then this is the trend line which has been broken in this week. And there are only two roles of trend line. If trend line is actually honored by the market, then market goes there, touches the trend line, or maybe penetrates the trend line and comes back. And if it comes back and closes below the trend line, then there is a chance that market will then further move to the downside, all right. But here it's not looking like it's gonna close below the trend line, especially despite there was a negative news from USA, negative flash manufacturing PMI. So even after negative flash manufacturing PMI, if USD JPY is not going to close below, it means this will be considered as the breakout of this trend line to the upside. And after the breakout of the trend line, what happens? Market goes up, touches the immediate resistance, then comes back and touches either the penetrating point, or maybe it can go like this. Let me let me show you. It can comes back to the trend line and then it can resume the uptrend. So this can be the scenario, or it can just come to, at the breakout point, because this is the breakout point. So this is the behavior of the market after the breaking out of a trend line. So let's see what happens, and then we will be trying to find any opportunity to take position. Short-term trader will probably look for taking short entry after formation of an insignificant bearish candle after touching 112.40. I'm in this area. All right, long-term trader will look for retracement to the downside and then look for the bullish candle formation, bullish candle pattern, any hammer, maybe morning star, maybe Maribojo, whatever, and then they will look for opportunity to long. So this is the nearest scenario. This is the scenario which can take place, which can occur on this USD JPY. There is nothing more to see on the lower time frame, like daily or 4-hour time frame. So let's see what happened. Let's see what kind of pattern do we get on 4-hour time frame after 112.40 is hit, and let's see whether or not market stops at 112.40. All right, thank you for watching.